Hi, I'm Anthony Hendrickson, Dean of the Hyder College of Business. Welcome to beautiful downtown Omaha and this month's Mid-America Business Conditions Index. We've surveyed purchasing and supply managers in the 9-state region, stretching from North Dakota and Minnesota right down the center of the country to Arkansas and Oklahoma. Here to discuss the survey's economic outlook is Creighton University's economic professor, Ernie Goss.
Welcome to the Mid-America Business Condition Index for the month of July. I'm Paul Adey, and I am here with Dr. Ernie Goss. Dr. Goss, you're looking a little more tan this month than last time I saw you.
Well, it is warm in the Midwest here, so
right.
I'm been out in the sun. So
well, let's jump into the numbers for July.
Well, they were very good, although did fall from almost a record high in June. Now, this is a July survey of supply managers in 9 states, of course. And the index dropped to 56.1 from 62.4. Anything above 50 is growth positives. So it was a good number. 8 straight months it's been above growth neutral. So that's very solid, very good number. And here I'm bringing up the chart of the index over since January of 2015. And you see there it's been very strong. Much like the U.S. number, the U.S. number has been looking good. Again, this is a survey of supply managers in manufacturing, so a little confusing for a lot of folks that say, well, wait now, some of your surveys, and that's the rural areas not doing as well, but those are rural areas. The urban areas, which most of these survey participants are from urban areas, looking good.
In terms of economic growth, what did this month's survey, what did the results indicate?
Well, we're probably going to grow in terms of GDP, probably 2 to 3%, which is still not that strong, but still positive. So looking good. We're adding jobs, adding economic activity. Unemployment rate's very low. Again, the rural area is not doing as well, though.
In terms of new hiring for the month, what does this month's survey indicate to you?
Well, the overall reading there did drop from June 60.7 to 56.5 for July. But again, above growth neutral 50, so looking very good. So we're probably adding jobs about 1.4%. So if you tack on productivity growth on top of that, that's where we get to the 2 to 3% overall GDP growth. So that was good. That was a good reading.
In terms of inflationary pressures, what did this month's survey show?
Paul, down for the 3rd straight month, and down we were 73.1 in May, then we dropped to 69.4 in June. Now we're down to 62.0.
Wow.
In July. So inflationary pressures, much like what we're seeing at the national level, seeing less and less of that. We asked this month about supply managers about what they expect in terms of the prices for the products they sell. And 1 in 5 expected declines in prices for the rest of 2017. Of course, that's unusual. So that's looking like inflationary pressure is coming down for our survey.
Interesting. How will data from recent surveys affect Federal Reserve actions? Rate hike? Do I even want to say that?
There may not be a rate hike. And that's going to be, I've been saying
You've been talking about it for a couple months.
Yeah, I know. That's all I talk about, Bobby.
You can't wait for that rate hike.
At the dinner table, I'm talking about. Hey,
Mrs.
how about
Goss?
That's right. She's an economist by proxy. And the kids, too. Everybody's an economist. But no, it's not. I was expecting one in September. I think it could be off the table for 2017. That's on the short side. On the long side, we're probably going to see a little reversing of QE. And that means they're going to be selling bonds, which long-term interest rates might rise a bit, but only slightly. Short-term may stay stable for the rest of the year.
Well, that's great, right?
Great if you're borrowing money.
It
certainly is. Not great for the bankers, though. They'd like the rates to be going up so they could charge more on interest and at least pay less on the depositor side. They
just stopped watching the show.
That's right. That's right. So this excitement, all this interest rate dilemmas.
In terms of economic indicators, which one should investors, consumers, and policymakers keep an eye on? This is your favorite segment.
Oh, it's a good one. On Friday, the 4th of August, watch that wage number that comes out from the Bureau of Labor Statistics. If it's less than 2%, we're probably not going to see a rate hike for the rest of 2017. Now, again, that changes each month, but that's what I'm looking for. On the CPI for July, that comes out on August 11th. Look for that number year over year is less than 2%. Likewise, we're looking for less and less inflationary pressures, which means no rate hikes and potentially a slowdown in the economy. And the yield on the 10-year Treasury, I talk about that all the time.
Right.
Keep an eye on that. It's up to 2.3 almost. If it starts going higher, that's something to keep an eye on, meaning more and more inflationary pressures. But on that flip side, if it goes lower, maybe meaning deflationary pressures, or at least less and less inflationary pressures.
What are the major risk factors facing the regional and U.S. economy that could undercut growth or significantly alter the outlook?
Boy, that's a good one, Paul. Japan just announced they were going to tack on tariffs on U.S. beef going into Japan.
Wow.
Up to 38.5, up to 50%. That's tough. And so watch for more of those. There could be a real harbinger of trade fights, trade skirmishes. Secondly, too aggressive a Fed. If the Fed should raise rates, say in September, I'd be troubled by that now. Also, their bond sales, if they increase their bond sales at a faster clip than I think is warranted, that would be troubling. That would push long-term interest rates up. And I think the third one, and everybody watching this video is watching Washington for what's coming out of Washington or what's not coming out of Washington. Mm-hmm. They're up there not doing much. They better do something on tax reform. We've got to see that. If we see paralysis there, political paralysis, that's not a good economic indicator. So keep an eye, and that's to be a warning signal. So,
wow. Well, so July was action-packed.
Action-packed on the manufacturing side. Again, for the viewers out there, this is more urban because we, on the rural side, not as strong, but this is more urban, almost all manufacturing. So looking good.
Well, Dr. Goss, July's in the books. You know what that means. Cheers.
Good economic report until we meet again on the first business day of September. May your economic cup runneth over.